What's up, everybody? Hope everybody's doing well. Had a great weekend. Let me get this screen resized for you guys. What's up, everybody? Hope Let me get this screen resized. Sorry, having some latency issues. Just resizing this for you guys. A few more people are jumping in, so just give them a few more minutes. Hey, what up, Aaron? What's up, Don? All right, cool. Let's go ahead and get started, guys. Quite a few people on this scan right now. They are recorded. Hey, Mike. Hey, Sirius. Hey, Chris. How you guys doing tonight? Hope everybody had a great weekend. I spent my weekend on the slopes this weekend. Had a lot of fun. Hope you guys got a chance to rest and recharge, so we can come to the markets ready to go to war this week, specifically tomorrow. So to get started, we do have quite an event-packed week. We do have a lot of Fed events going on this week, so wanted to hit on some of those events that we have going on this week, and we'll post the economic calendar, of course, in the room as we always do. But some of the key events that we have this week going into the week. One of the biggest ones I'm excited for is that banks are going to start reporting their earnings, their Q4 earnings, this week, which is going to be really interesting. One of the things you guys hear me say all the time is that in times of economic turmoil, economic distress, economic downturns, 9 times out of 10, majority of the time, the banks lead that charge down. So I'm interested to see how the banks performed in Q4. That'll be telling for big tech when we get big tech earnings week for Q4 earnings. Second event we have going on this week is going to be Fed Chair Powell speaks on Tuesday. So we're going to see some volatility in the markets on Tuesday with Powell speaking. So we need to be prepared for that. We know how whipsaw action that can be. Third thing that's going on this week is we have Fed member Harker is going to be speaking on Thursday. So another Fed speaker on Thursday. The fourth thing we have going on is we have the December CPI release on Thursday. So Thursday is going to be a pretty big day. We're going to have Harker speaking. We're going to have the CPI release, and then on Friday we're going to have consumer sentiment data. So we're really big action-packed week as far as catalysts go for market volatility. So one of the things I'm going to say this week again, and I can't stress this enough, is one trade this week on any of these events is not going to make you a millionaire, but one trade on any of these events this week can completely blow your account if you're not careful. So like I always say, risk management is going to be key. On these days where we have this volatility, volatility brings big moves up and down. So it's worth your while to size down, because if the move is against you and it's down, you're sized down and you're prepared for that. If the move is in your favor with the added volatility, we're going to get a bigger move. So you don't need to size in as much to make maybe the same returns that you're looking to make on a normal position size without all of that volatility. Okay, so let's keep that in mind this week. Let's play smart. Double black diamond, John. Yeah. It was a lot of fun this weekend. Yo, what's up? Whoa, what's up, J Boy? Tank the Frank. Chris, what's up? So yeah, just keep that in mind, guys. That's one thing that I'm watching this week, is just the fact that there's going to be a lot of added volatility, which is going to be in our favor, basically, as long as we keep risk management at the forefront of everything we're doing this week, which we're going to do. All right, so with that, guys, I want to go ahead and get started and look at some charts, see what we're working with. First chart I'm looking at here is Tesla. This is one that a lot going on with Tesla over the last, basically month of December just got beat so bad. on Tesla, and so wanted to show you guys what I'm looking at here. Let me take these drawings away just to kind of show you guys what we're looking at. I'll take VWAP off as well. This is the hourly chart without extended on Tesla. Okay, so we can see what happened right when we fell through that 155 level. It's just been a massive move down basically, and really all, like I said, all of December. We've just been at the start of December. Here's the start of December. Back here around this 200 level, it's just been straight down since. Yeah, what's up, Tommy? No, we're not going to lose any money this week. We're going to play smart and be safe. One of the things, though, guys, that I'm watching here on Tesla is going to be, I'm going to zoom in here a little bit. So if you guys remember what happened, we bounced at the 108 spot back here. See all this volume on December 28th. But if you remember, one thing that happened in the after hours on this day, let me flip to extended real quick just to show you guys. I know I'm jumping around a little bit, but I want to show you specifically what I'm looking at here on Tesla. If you guys remember here, we bounced on the 27th. We came down, and we bounced that evening, right? That morning at 5 a.m. on the 28th. We bounced at a low of 104.22 in the extended hours period, right? So 104.22 is a big spot because you can see, again, we held that same level, 104.65. We held that same spot on January 3rd at 1:30 on the hourly candle, right? We came down to that same spot, got a wick off of it, and off that wick, we moved all the way up to that next day from 104.65 all the way up to 114.57. Okay, which is, again, an interesting spot. I want you guys to keep that spot in the back of your minds. So on the 28th, right, we bounced 104.22. We bounced all the way up, let's just say up here in and around the 123, 124 area. We came down there on the 3rd again. We tested that 104 spot again, 104.65. This time we bounced to 114.66. Okay, then we came down and we broke through that level in pre-market on Friday. We broke 104.65. Everyone thought we're going to 100. I admittedly thought we could be going to 100 on Tesla, and we were able to play puts at open. But one thing I did mention to you guys when I tweeted on Friday, I said this is going to be an area that buyers are going to step in at. They're going to try and defend 100 because they know if they break 100, it's going to be 90, 97, 95 basically on Teslas where we're going. Long-term buyers, traders stepped in here. We got massive volume on this candle, even more so than what we've gotten on some of these other candles. We got 69 million shares traded, almost 70 million shares in a 1-hour candle on Friday on Tesla, and we bounced at that basically 101.80 spot on Tesla after hitting that 101.20 spot in pre-market. And I said that this is the bounce spot here. So when we cleared 104.65, what was the next logical spot for us to go to? Right back to where we went to 2 days ago, right? We popped right up. The high a day was 114.39 on Tesla. And if you guys remember where we popped to 2 days prior on Wednesday, we went to 114.59, right? 20 cents off the high a day on Wednesday. And that's why these key levels are so key, guys, to pay attention to. So what I'm going to do now is I'm going to make sure that I have a key level set. This is, we'll talk about this on Thursday when I do my key level class. But we bounced, the 104 spot's going to be huge for me still. This level is going to be big as well, this 101.80 spot. But upside level, this should be a big level for us because you guys see. Let me put a drawing in here. I already had one up here. Really, 114.11. Really, it's we can keep 114.11. We could use 114.80 in the 114s basically. Like that's our supply zone. But you see what happens when we broke 114, right? We came all the way down to 104, right? We break 114. We come down to 111.81. Same levels we've been playing: 111.81, 101.09, and then 104.22. So similar levels on the upside. We had these same things on the hourly, right? When we busted through this level, the next spot up is going to be 109.90, We broke through that. The next level up is going to be 111.81. We broke through that. The next level up is going to be this 114.11 or 114.60, right? Whatever we want to call that. I'm just going to delete that since we have one there. So this is, this is how you play these levels. Let me get rid of this supply zone. That was really only for those couple weeks back where we were looking at that. What I'm looking for now on upside movement is going to be a move back to the 120 mark on Tesla. That 120.59 to 122.26, that's going to be our supply area that I'm looking for this to push back up to. If we can confirm over, I'd say 115 at this point, right? If we can get over 115, because we got some wicks there, 114.92, 114.80, somewhere in there. If we get over that, I don't see a lot of resistance pushing us back up to 120 and the 122 area. That's my first upside target that I'm looking at. Now, if we reject this area again, we'll play the same exact levels to the downside. You guys see how well this held on the 1 hour chart on the way down here? We'll play those exact same levels. And let me zoom in. That would make it a little bit easier for you guys. I know some of you guys might be on mobile, and sometimes it's hard to see on mobile. Let's see if that looks better. Sorry, the latency is a little rough here, but hopefully zooming in will help you guys. Yeah, I think this looks better. We'll play these same levels, right? Bounce, next level. Confirm, next level. Reject, stay on this level, right? So we've been playing these levels so well that we're going to continue to use these levels until they don't work anymore. So I'll chart these out tomorrow morning again for you guys. I'll post the same chart. I'm not going to add any levels because we've already got these levels in here. If anything, we could maybe move this level up just a tad. But I like the way that it's kind of played off this level. Let me just move it up just a little bit. There we go. So my new level is going to be this 114.63 is what I'll use. You can see where we've rejected this level a few times, bounced on this level back at 5 o'clock in the morning on December 29th. We rejected that level on the hourly chart on December 28th at 2:30 in the afternoon. When we cut through this level, we break down, reject, 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 reject. So this is a big spot, right? We broke through this support, right? We broke down through it, and now we're rejecting, rejecting, rejecting. If we reject again, I expect us to go down and see 111.81, 109.09, 104.22. Next level downside. Let's go ahead and mark this just so we have it. Right, this is where we had a lot of buyers step in. What is this level specifically? Let me see. This is 101.82. So I'm going to go ahead and mark 101.82, 101.83, basically same thing here. I'm marking this level. And then after that, right, we got 100 on deck coming on Tesla. But if we push up through 114.63, we've got 120. We've got the 120, 105 level, 122.26 above that, right? You see what happens up here. We moved all the way to 124, basically 124.50 is the next level upside. I can mark that level. Let me get my. See, there we go. Basically right in there. 124.50. Right, we rejected back here on December 27th. Above that, then I see 128, 129, and then all the way back up to 137. So we've got a lot of levels on here, guys. But the nice thing is that Tesla has been playing true to its levels, which has been really nice and really excited about. One thing I do want to show you that I'm watching if we break this level, I'm going to take those levels off, and I'm going to show you guys something that I'm watching here that I think is pretty interesting, and I think you guys should maybe keep this on watch as well. So what I'm watching here on Tesla, it's going to put these levels back on it, I think. I'm watching this setup right here. Let me show you without extended on. Sorry, I did that too. There we go. This is one of the breakouts that I'm going to be watching intraday. You guys can see. Sorry, my levels make it a little hard to see, but basically, let me take the drawings off. You guys see there's a trend line, right, from here all the way down through here. And if you see, when I have that on, you see how well it's respected this 1 hour trend line during market hours. Right, my extended hours are turned off here, but I'm looking at during market hours, we've got 1 rejection, 2 rejection, 3 rejection, 4 rejection, 5 rejection so far on the hourly time frame, right? So a breakout over this level, I know that we can expect a push to the upside, and this could be a nice mover since this is a big hourly trend line. So just one thing that I'm watching, guys, it doesn't mean that this is going to happen. It doesn't mean that this is for sure happening, but I think this is a move that could be really nice if we break out of this hourly trend. It's something that'll be on watch for me. You guys are going to hear me talking about it this week. You're going to hear me talking about the levels on Tesla that we went through tonight. We went through these levels last week, guys, and it played really, really well to these levels. We went through Netflix levels last week. It played really, really well to its levels. We posted the BA levels. Someone in chat, Spider, I think it's Spider Kid, like 280% on Friday, I think, on BA, just playing the levels. So I can't stress it enough, guys, that if you just learn simple supply and demand, simple support and resistance from these levels, it makes the game a lot easier for you. We don't know where the stocks are going day in and day out, but if you know how it acts around these levels, it gives you an edge in the market to take advantage of and play calls or puts at those levels to give yourself, a financial edge against the traders out there and retail traders that don't really have these levels. So if you guys aren't coming to the market every day with levels marked on your chart and you know where we're going to bounce, where we're going to potentially reject, that's something that I would seriously consider doing on every Sunday. That's what I use these Sundays to do, to kind of find these setups and let me know, when we break certain levels. Okay, so that's Tesla, guys. First name I wanted to show you. Next name I want to look at is SPY. Okay, my SPY chart is going to have a few lines on it too because we've been talking about this one a lot. This is an interesting chart for me. SPY is at a very interesting spot. Let's zoom out and show you extended hours. We broke out on Friday over a key level that we've had for quite some time. Okay. So you guys can see this 386.81 spot that I've had marked has been a really, really big spot. 387, whatever you want to call it. I have it marked as 386.81 on my chart. Okay. This level has been paramount over the last probably 2 weeks, 2 to 3 weeks. Let me zoom in again for you guys because I know it gets a little hard to see. Let's make this a little bit bigger. There we go. Okay. So we rejected, right? Rejected, came down, and then we started holding this trend line, which I was watching, which I put on my chart here. Okay, so 1 reject, 2 reject, bounce on the trend line, which is at our 375.30 level that we have marked, right? Bounce on the trend line, reject 386.81, bounce on the trend line, bounce on the trend line all day, flirted with this trend line, flirted with the breakdown that would send us back to 375, but they held it, right? And then boom, Friday we rock it, and we finally break out over this level. And then what happens? We come back down, and in the after-hour session, we try to break down through it, but it can't break through it. So I'm interested to see how pre-market opens tomorrow with futures. At this point, if we hold 386.81, my upside level is going to be 388. And then I'm looking at 390 and then making a run back to this 388, 390. Then I'm looking for a move back to this area around 394. Then I'm going to look for 397 and then potentially 400, right? But I told you guys I wasn't interested in going long on a lot of names until SPY could get out of this range. Because if you look, we've been in this range for quite some time, right? We've been stuck between this 386.81. Basically, let's call it 387 to 374. We've been in a $13 range, basically, dating all the way back to December 16th, which isn't a lot on SPY. $13, isn't a lot, but let's see, right? Because this could be an instance where, market makers get you comfortable going long, and then all the volatility coming this week, with CPI, we could see ourselves back at 360, 355, 350 this week with CPI coming in Fed speakers. It all depends on, what type of volatility they bring. We could also see ourselves ending the week, over 400 at 405, 410 area. I don't have a bias on where we're going. I don't know where we're going to go. So a lot of people ask, hey, where do you think SPY's going this week? I have no idea. I have no idea where we're going to be in pre-market tomorrow. So how can I tell you where we're going to be out on Friday? What I can tell you is that as of right now, without having pre-market data tomorrow, we are over that key level 386.81. More specifically, 387 is where we closed, 387.57 in the after-hours session on Friday, which bodes well for a move back to 390, 395, and 400. That's what I'm looking for to the upside. To the downside, we'll play the same exact levels if we fall back down in the same range. One second, let me just see if I have any comments here while we're looking at this. Where did you get your 386.81 level? Well, if you look here, let's look. Let me see if I got it from a further time frame back. I don't know if I did or not. It doesn't appear that I did. So the 386.81 level must have came from multiple rejections. Sorry, I thought I was going to sneeze there for a second. Multiple rejections. So on the 16th, right, we rejected that level. In pre-market, we rejected it here. On the smaller time frames, I think we rejected it, but then you can see here how well we held the 386.81. Again, here in pre-market, 386.81. And then when we finally broke out, you see here on Friday, we wicked all the way up to 386.81 and closed the candle back down here at 385.57. And then we got one more test. This is it. Okay, so here's a good example, guys, of a breakout. But to answer your question, Chris, I think this, just the last 2 weeks, we've been respecting that level so well that it became a key level of mine to the upside. I knew we had to break it because we've shown multiple times that we haven't been able to break it over the last 2 weeks. You guys ask about how to play breakouts. How do I do that? Let me show you how this looks on a larger time frame. Okay, on Friday, the 11:30 candle, the hourly candle, right? We opened the hourly candle at 382.91. We closed the hourly candle 386.11. Okay, so if you bought 385 calls here, you're rich because we went up in an hour. We went up about $4. That's a joke, but those went really well, right? The high was actually 386.11. The open was 382.93. The close was 385.34. So those 385s went in the money if you got those within 1 hour. Okay, but here's the thing, right? We bounced at our key level, 383.14. Right? We pushed over our next key level at 385.19. So, do you buy the initial breakout on that level? No, because if you do, you're buying this wick up here, right? You're going to buy the wick. It's going to sell off. And by the way, right, we touched 386.13. If it sells all the way back off like it does on this candle to the low of 385, that's a $1.13 move to the downside against you on 0 DTEs. You're cooked. Those things are down 40, 50%, right? And now you're hoping that the premiums go 100% just to get you back to break even. So here's how you play the breakout on the bigger time frames. Break the key level. And by the way, when you're playing these larger time frames, I don't necessarily recommend playing 0 DTE. Newer traders don't have to play 0 DTE at all. You can play 2 weeks out, 1 month out, and get really, really nice percentage gains without that big downside risk that the 0 DTEs come with. Break the key level at 11:30, right? Now the 12:30 candle. We open the 12:30 candle at 380. What is this number? Sorry, we open the 12:30 candle at 385.39. We drop to 385, right? So a 39-cent drop, and then we come back up over that level. As soon as we push up over that level, you could buy calls, because now we've confirmed this 385.19 level is support. We wicked up over it. You could wait for a candle close as well, because we push all the way up here to 386.81, right? Our next key level, the high is 386.72. So, we're nine pennies off. The next candle, though, again comes down, bounces on that level again. So we break over the key level in the 11:30 candle. The 12:30 candle holds it. The 1:30 candle holds it. And then what happens from that, right? We get this hammer candle on a 1 hour chart, and bam, we go from 385, the low here, of 385.06 all the way up to 395.25 in basically the next 3 hours on a 0 DTE, which is massive. So that's how you guys play these key breakout levels, and I hope that helps a little bit. I get asked that a lot. How do I play these levels? How do I find these levels? I'm going over that on the class on Thursday. We'll talk about how to find these key levels, how to develop game plans off of these key levels. But this is what I'm watching on SPY. You see a lot of charts out there. Let's say this is the bullish case, this is the bearish case. For me personally, what I'm looking at is just the fact that we are now, right? We're now over that 386.81 level. And that's the key thing that I'm watching. 386.81. I said I didn't want to go long on anything until I see what happens over that level. Well, now we're finally over that level. Let me show you guys what this looks like from a daily perspective to give you a little more perspective on what I'm looking at here. Hopefully this chart isn't too crazy. But what I'm looking at here, basically at the 388 level, guys. Let me show you. Sorry, not 380, 390. Because like I mentioned, that's going to be the next big spot. Basically here, you see where we bounced. 390 is a big spot because we held this spot on the daily time frame here back on December 6th, December 7th. We basically held 390, right? Let me mark that because that's our next upside level that I'm looking at. 388, 390, somewhere in there. Okay. So 390. This is why it's so big, because we had this trend line here, but we also had upper resistance bands on the daily time frame as well. You guys see how this wedge basically formed, right? In the daily time frame, we consolidated in this wedge, and it started getting very tight. One more tap to the downside on this wedge on the daily time frame, and boom, we rocketed, right, all the way up. Basically, this daily candle, the low was 379.41 and the high was 389.25. Almost 390. We almost hit our upside target level. So again, you guys hear me talk about court awareness, court vision. It's very, 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 very easy to get sucked into these charts and look at a 5-minute chart. I do it all the time. Sometimes I get too inundated with the 5 minutes to really understand where I'm at on the chart, right? It happens. I've been there. We've all been there. Hopefully this shows you guys that, like, even on this, when you're looking at this and what's going on and what's happening, you don't really see this breakout here, but if you look at the daily chart and we go back and look, we know that on the daily chart, as soon as we broke over, what level is this? Basically, when we break 384, we know that that's a big breakout on the daily chart, right? So as soon as we break 384 on SPY on the 5-minute, let's take a look. Right, here's 384. And you see here, right? This is important. If we mark this level, let me mark the level here real quick. I know we're going all over the place with these levels, but I want to show you guys because I think this is important to show you. Right, 384. There we go, 301, whatever. Same, here, let me move it down one. Just make it, that way it's easier. Sometimes I hate Webull, how hard it is to, here it is, sorry. 384, even. Let me just show you guys, right? So we came up here in the high, 383.96 on the 5-minute. In the morning, we sold off. And you guys know coming into the day that 384 daily breakout is huge for SPY. If we played this way on Friday, and I'm telling you guys this because we're going to catch these like this on the daily time frame because we'll have chart awareness and chart vision. We rejected that daily resistance and came all the way back down to 379, and this was the low, right? We came all the way back up and we rejected again, right? We rejected. We basically came up to 383.94. So right here on SPY, this is a double top already forming on the 5-minute. Then what happens? Then we hold this level, right? Which means buyers are present. Because on that next candle, we sold all the way down. We rejected and sold. This one we popped up. Next candle, we rejected. Buyers stepped in, sold off, buyers stepped in, and then the rest is history. As soon as we broke out over this level, you buy calls on this 384 breakout. You ride it all the way up, right? 385.19 being the first target, 386.81 being the next target, and then 390 being the target after that. So those two lines close to one another around 384 is essentially a demand zone, as Darth says. It would actually be a supply zone. Nicholas. So supply is when there's a lot of inventory for sellers there, right? There's a lot of supply. Sellers are active there. Active selling is happening at the 384 spot because we rejected, right? Buyers didn't step in at 384. Sellers stepped in. Sellers offered more shares than buyers are willing to buy. And anytime, like Darth says, when you have more sellers than buyers, the price is naturally, it has to go down, right? That's just the law of basically physics, right? Like simple economics, if more people are buying than selling, the price is going to go up. If more people are selling than buying, the price is going to come down. Okay? So active sellers at 384, active sellers at 384, this is now a supply zone. What we want to see is a breakout over this supply zone, because if we reject the supply zone a third time, we're probably heading right back to low a day, or at least the 380 mark. But we broke out over that, and then you guys from there, we had the upside targets, 385.19, 386. You know, you could have played here. You could have played the first breakout, the next candle, come back down, the low of this candle, 384.18. You know that 384 is our level. The low on this candle is 384.18. You could have bought in calls, right? We break over this level. The next candle pushes up, closes down here. You're buying calls with a candle close risk of 384 because that's our daily trigger on that wedge breakout. Right? You know that if we break over 384 on the daily chart, let's jump back here one more time just to show you guys. Right? If we break out over this 384 spot on the daily time frame, which we did. Sorry, I wish this was easier to zoom in and out. But if we break out over 384 on the daily time frame, you guys know that there's a good chance for upside because we've rejected it so many times on the 384 spot, and we've stayed within this wedge. 1, 2, 3, 4 rejections in the wedge once we fell into it. Maybe this could be 5. Exactly, Nick. That's how it works. That's simple supply and demand. Once buyers finally stepped in and sellers stopped selling, we got a massive move. We broke that 384 spot, and from 384 we went basically all the way to 389. Right, the high day on Friday was 389.25, 75 cents off. So that's simple supply and demand. That's simple support and resistance, and hopefully that helps you guys out looking at that 5-minute candle chart. That's kind of what I look for. You know, I was traveling on Friday, so outside of the morning session, didn't get a chance to play that, and really SPY wasn't on my watch list as much. I was, mainly more focused on Tesla because selfishly I wanted to see Tesla under 100, which we didn't get, but it's okay. That's just how you play key levels. And even if you miss this breakout, right, here's another important thing to look at. You missed this breakout, but we pop up over our next key level of 385.19. Did we get a 5-minute candle close under that? Not once, right? Hold, 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 hold. Pop up all the way to that 386, basically 386.81, our next level, right? Come down, come down, come down. Hold, 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 hold with a hammer candle that wicked underneath, right? So this could have been a nice entry. This could have been a nice entry here. Hammer candle, right? We get a hammer over our key level for a move up to the next target. You could scalp that one, right? Buy some here, sell some up here. So you're buying even at the top of this candle. This candle closed at 385.67. It moved $1, right? In 1, 2, 3, in 20 minutes, it moved $1, which is huge on a 0 DTE on SPY, right? That's a massive move in 20 minutes. Probably 100% play. I'd have to go back and look at premiums. That's probably 100% play. Just simply playing key levels, right? You're buying this because we hammered over this level, and you're going to stop out if we lose this level. That's what you're playing. Here's another one, right? Hammer under our key level. We buy, we buy, we buy. Maybe we sell some here at this first target because we know if we hold this level, our next logical target is going to be right where we went to this time, which here's a high of daybreak, right? A high of daybreak, which we get here because our prior high of day was at where we were here at these candles. So you scalp here at this bottom, 385.19, and we're playing up to that high of daybreak, which coincides with our next key level at 386.81. Buy here, 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes later, you could sell, right? Or you could sell some here, wherever you want to sell, whatever, sell when you're happy. But this just goes to show that, like, you could play level to level, and you don't have to play 0 days. You could have played next Friday contracts and just played these key levels. You could have played Monday, you could, whatever day you want to. You don't have to play 0 days, but level to level is how we like to trade. And what I would do here is buy. I wasn't active here, I was driving here, but buy here, hammer candle here, buy, right? Sell some at the key level, let some free contracts ride in case we pop up through it, because look what happens again. Bam, we pop through it. Or here's another example, right? Buy, this is a scalper. This is what scalpers do. Buy at this level, sell at your key level, which is your profit target zone, right? Don't leave runners if you don't want to, right? This is I'm speaking of a scalper. If you're on margin, it's easier to do this. Don't leave runners. You just sell, okay? Here's your entry. Here's your target. I'm out. We got what we wanted. 5, 10, 15 minutes later, we come back up to that key level. We reject it. 20 minutes later, we pop through that key level. The next 5-minute candle, we come down. And what's our key level? 386.81. This candle comes back down and tests 386.80 and bounces off of it. Okay, so now we broke out over. Not only did we get a high a day break, we got new high a day. We came back down and bounced off of that prior resistance level intraday. Rejection, 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 break. Well, rejection, break. Resistance flips to support now, right? We bounce. So here you could buy calls again. You could scalp. The low here, 386.80. What's our next profit target to the upside? I've said I'm looking for 388. Then I'm looking for 390, right? So bounce. Where's this next rejection at? 388.15, right? So bounce 5, 10, 15 from 386.80 all the way to 388, right? That's like $1.40. Sorry, $1.20 on 0 DTE in 15 minutes. That's massive, right? And that's how you play these level to level. You could sell some here, and again, if you're scalping, if you're in and out of these positions and you don't want to hold runners, just scalp. You know, you get 50, 60, 70, 80% move in one play. Like, that's serious money. Take your money and go, right? Rejection at the 388 level. Let's mark it here. Let me just put this on the chart so you guys see what I'm talking about. I think this will help. Okay. Candle close over. We might be getting more moves up, but when we, you keep that trailing stop, right? So even though we're up here, we just candle, bam, 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 green. When that starts to reject and comes back down, you stop out. You stop here. You just took that trade from 386.81 all the way up to 388, stop out. I don't care if it's going to go up to 389 because we just took that trade 60, 70, 80%, 100%, whatever it was, right? What I'm going to do is now look to see if this level acts as resistance or acts, as support. And I'm going to give it a little bit of time to digest because we just had a massive move, right? Look where we were at. We were at 379. Now we're sitting at 388. We're up $11 on the day. It's 2:30 in the afternoon. Let's see if we consolidate a little bit or we push up. Next candle, wick up. We reject. Next candle, push up, make a new high a day. Next candle, come down, and we actually bounce right at 388. So I would have probably bought calls here again, risking a 5-minute candle close below this, right? Bought here, we pushed up. You probably could sell even on this push, but we pushed up here, came back down, and then we ripped up from here. So if you didn't get in on this one here, if you missed this entry, the next candle should tell you something, right? Because we got an even bigger wick, another hammer candle. And what happened last time we got the hammer candle? Hammer candle over our key level. We went right next to the next level we have on the chart. Okay, now even though we didn't make it there on this one, we came pretty darn close, 75 cents away. We moved $13 intraday on SPY, which was huge. Hammer candle at our key level, looking for that next level push. We didn't get it, but what we did get was a new high day push. And again, when you get these types of moves this quickly on 0 DTEs, those wins add up a lot. Colby, easy to remember for dudes. Supply is above, demand is down. Your D is below, you welcome. Yeah. Just think of it in the sense of like if there's demand for something, why is there demand? Because or what is demand for something? People are going to buy, right? Think about everybody that plays PS5 or whatever. PS5s are out of stock due to high demand, right? People were buying too much of it, and it's not available anymore, right? Yeah, Nicholas, that's what I'm saying. These key levels are huge, and it's very easy, guys, on a chart. And I'll admit this: it's very easy to go back on a chart, like on a night like tonight, and say, look at what happened on Friday, and look how easy it was. But as you start to do this every single week on Sundays, and as you start to look at this every week, and you have these levels on your chart that become, mainstays on your chart, it's going to make your intraday trading that much easier because you're going to feel more comfortable buying a hammer candle at your key level because you know how big of a level 385.19 is. You know how many times we rejected 385.19 since December 16th. And then you look intraday and see, man, as soon as we broke over 385.19, we held it, 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 we held it. You know what I mean? So there's multiple times here that you could have scalped this. You could have bought this first one right here, and risked the candle close under, right? This first candle at 11 o'clock. And if you would have bought the close on this candle, right when this candle closed at 385.27, we made a new high day, we made another new high day, all the way up to 386.11, right? So that was a massive move that was made there just on this candle, which is really, really big. And in that short amount of time, that's probably a 30, 40, 50% move on a 0 DTE. Absolutely, Nick. No worries at all. Matt, so what I'm looking at, I'm looking at Tesla, I'm looking at SPY. We're going to go over Netflix next. Those are going to be my top 3 that I'm watching this week. I also am going to watch Apple, and we'll talk about that in just a few minutes. I've spent a lot of time on SPY because I think it's important because I want you guys to see how well it plays off of its levels when you have key levels. One thing to keep in mind is during these binary events like CPI drops, during Powell speaking, levels don't matter anymore. Algos don't care about fibs. They don't care about anything, right? They're just going to take it wherever they want to take it to. But what is interesting is when it typically bounces or when it rejects, you'll notice that if you have enough levels on your chart and they're good levels, it will play with your levels really, really nicely. Tommy Two-Step, Texas. So in theory, if you were to see a hammer candle forming, would you wait for it to close and then look at the following candle for an entry? For me, like if I see a hammer candle forming, what I'm going to do is buy right after that hammer candle, risking a 5-minute candle close below that hammer, below the level that contract or underlying hammered over, right? So let me show you what I mean by that. Here, if I buy this hammer candle, as soon as the candle's done forming on a 5-minute chart, I'm buying basically at 385.47, and my risk is going to be 385.19. So I'm risking like 27 cents, basically a quarter move, 25-cent move. If we get a 5-minute candle close down here, I'll probably stop out for 20, 25% if it's a 0 DTE. But if we hold this level like we did, I'm still in the position because my theory is still intact. What happens to a lot of traders, guys, is you size way too heavy, and you're like, oh, I'm in this with 50% of my portfolio. I'm down 25%, so my port's down 12.5% right now. I'm freaking out. Don't size so heavy. You don't have to, especially on Fridays. I would advise you not to trade Fridays or just size down on Fridays because it's you don't need to. Tesla calls on Friday went like 2,000%. You could have put $1,000 in and walked out with 20K if you held it all day. Not realistic, I know, but I'm just showing you guys what happens, right? Like you could put $100 in and walk out with $2,000. SPY 0 DT can do the same thing, but just play the key levels. And the reason I'm saying buy this hammer candle and risk a candle close under is because how many candle close unders have we had on 385.19 up until this point at 105 Eastern on Friday? None. Bounce at the level, 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 bounce, bounce, and then this is the candle we got over at. So I knew that 385.19 was going to be a big spot because that was what's called a simple support and resistance flip. It had been resistance since December 16th, and it finally flipped to support. So now on the downside, one of the biggest levels I'm watching to the downside is going to be this 385.19 level. That's going to be key for me. 386.81, 385.19, those are huge for me. If we hold these levels, I see more upside. If we lose these levels, the first level I'm looking for is not going to be the 384 level, because that was the daily. We can take this off of our chart now. That was the daily wedge breakout level, right? So I'm going to take that off. The downside levels, if we lose 385.19, is going to be the 383.14 that we've been playing, and then 380.40 or 380, basically. Okay, that's what I'm watching on SPY. All right, now let's jump over into Netflix. Netflix is another name, guys, that we've been playing all week. Levels have been playing really, really well on it. Immediately off the bat, I noticed something on Netflix that, again, I wasn't trading, but if I was, I really, really like this setup on Netflix. And do any of you guys see that on the chart right now? Something that I really like on here that you could have played with? Yeah, Nick, after hours. There's usually less volume on after hours, so not too concerned with after hours. More so looking at what's going on during RTH, regular trading hours. Does anyone watching, though, see anything on this Netflix chart that jumps out at them and says, yes, you should take that? We just talked about it on SPY. See if anyone has... I'll give it like 1 or 2 more seconds if anybody types it in. Nope, no one sees it. Okay. Maybe you guys see it, you just don't want to type it in. Let me show you guys what happened on Netflix, right? We broke down through our level, 310.81. And I told everyone in the morning, I said, look, Netflix broke that key level. Watch for 305 to come next. And for a potential bounce at 304, right? This is what I said on live. Levi got it. Yep, Levi, Don, Lance, everybody got it. Nice. That's exactly what I was pointing at, was the hammer candle. But let me show you guys how we get to the hammer candle. Yep, resistance flip to support. That's perfect. You guys are getting it. Let me show you how we get there first. Let me walk you through that. So when we broke down through 310.81, which is a key level that we had, and we've been playing off this level for quite some time now, break down through that, I said, look, next downside level that I see, if we break that level and confirm under, is going to be 305, 304, right? So we come down, and what do? We basically bounce at 304. Now, one thing I get leery on here is just saying, oh, we're under 310.81, 304, you know, let's buy puts and let's break 304 and go down, right? That's not how I like to play things. What I like to do, and let me show you guys, we've got a trend line, right? We're just trending up basically all day here. Trend, basically what we're doing, right? But higher high, right? Higher high. And then we got, higher low, right? Higher high, higher low. Okay, so this is what's called stair stepping, and we're putting in these trends, right? Let's do this again from here. Let's see if I can get to where, there we go. Higher high, right? We made a new high day here. That's important. Higher low, because our prior low was here, right? Higher high, which by the way is over our key level, right? So Netflix is on watch for me if I'm watching, because we broke our key level to the upside and we're in this trend. Higher high, higher low, higher high, higher low, higher low, higher high. Sorry, you know, low, high, low, high, low, high, low, high. Now we need to see, are we going to hold 310.81 and make a higher low or not? And what do? Bam. Higher low. Right at 310.81. What's the next level to the upside we have if we break 310 on Netflix? Go back in the verified floor and look, and you'll see if we break 310, 315 comes next. And just look at this move that Netflix put in. All the way from this level, basically. Bam. Basically from this point, right, 1245, all the way to 210, just straight up. right? 310 all the way to 315, a $5 move in less than 2 hours intraday on a Friday. Those contracts exploded if you bought 315s because now they're in the money, right? You can scale some out. And by the way, what do we have? Higher high, higher low, higher high, higher low, lower high at the end of the day, right? But my point here is that this was a perfect trade on Netflix because we bounced off of the key level and we kept pushing. And as you guys know, like I've been telling you for the last 2 weeks, Netflix is a great name to trade because it plays off of its key levels so well, right? We've looked at this chart numerous amounts of times. We've looked at how well Netflix plays off of its levels. We've talked about this time after time after time after time, how well it respects its levels. We talked about what happens when we break 300, right? We talked about what happens when we hit 295.50. If you would have swung calls on Netflix on this big bounce on 295.50 on the 15-minute chart, let's see what the hourly looks like. Actually, it might be a little bit cleaner. Yeah, 14 green candles in a row, Nicholas. Crazy stuff, right? Here's the hourly chart. Right? So we come down, bam, we bounce at 295.50. What happened the last time we broke over 295.50? Right? 295.50. We got over 295.50. We went to 300. Right? Last time we got over 300, we made a move back up to, let's go back over here. Here's the big move, right? 295.50, cracked through that. Here we go, 295.50, broke through it. Went to 304, basically, right? Held 304, went all the way to 319. Okay, and here's that level again, the 310.81. That's where that key level, 310.81, comes from. Okay, so now, just plain simple key levels on Netflix, had you have bought calls on the 4th, which was, let's see, Wednesday, on the bounce, right, at 10:30 in the morning, 295.50. If you bought like next week 315 calls, 320 calls, you're sitting pretty right now because you're just playing simple key levels. 295 bounce gets us 300, break 300 gets us 304, break 304 or 305, kind of, that's what I said, 304 to 305 gets us 310, 310.81 to be specific. That's the level we have. Look, rejection, 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 rejection. Bam. Actually, I think we got over on this one. Yeah, we got over. Got over here, tried to push up a little more, rejected, came back down. When we lost that level on the hourly time frame, you could have comfortably swung some puts. We break down through 310.81, come back down to 304, bounce off that. This is Friday morning candle. Bounce off of 304 and make our way up, and bam. We just play those straight key levels. Awesome, Matt. Yeah, make sure you guys do that. It's the best thing I can say to do. I'm going to go over this on Thursday and show you guys how I come up with these levels. But it's honestly one of the things that a lot of traders that aren't succeeding, I'll ask them like, hey, did you chart out your levels? When you're coming into the day, right, when you come into tomorrow, what are your levels that you're looking at on Netflix, on Tesla, on whatever ticker you're looking at? If you know these levels, it makes the game so much easier. Like, look, I don't even have any EMAs on this chart. Now, I use VWAP. I do use some exponential moving averages. But on this chart here, like, I'm just naked charting. I don't have any EMAs, no VWAP, nothing like that. But I'm just showing you guys, if you just use key levels, just play level to level, especially when you're putting in trend structure. When we break down on Netflix and we start making a higher high, a lower low, a higher high, a lower low. I wouldn't really call this higher high, right? Because this is a bounce at low of day, so we don't really know what this is going to be yet, but let's do it like this, right? Bounce low of day, put in this local high, lower low. We didn't go test low of day, right? Lower low. Higher high from that local high we just had. Higher low, higher high, higher low, higher high, higher low with the hammer candle, ding, 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 right? Hammer candle at a key level, lower low, in trend structure, looking like a stair step. Bam. This is This should have been a trade that everyone in the room should have taken. Unfortunately, I didn't take it. I wasn't at the desk for this. I was getting everything packed up for my ski trip. But this is when we look for things as traders to like slap us in the face and say take this trade. This is the chart slapping you in the face saying take this trade. Stair step, stair step, stair step, stair step, down, up, down, with a hammer candle on the 5-minute at our key level, and then rocket mode, right? Like 14 straight candles in a row that were green, pushed us all the way up to our key level, which was 315, what we were looking for. Level to level, that's all you have to play. Okay. So, that really is what I have for you. The only two things also I want to show you guys this week. One thing that I found very interesting that I'm still watching, and I was watching on Friday. Trust me, I really wanted to see us break this. But I mentioned in the morning, I think I said this on voice, I didn't take my own advice, which I probably should have. Amazon. Amazon bounced at a huge weekly level. We had to hold this level on Amazon. 81, what level do I have? 81.48. Let me go out to the weekly and show you guys why. Look at how important this level is on Amazon. And look at what the bullish, bounce we got here. Amazon's looking good for a bounce and for a move potentially back to this like $92 area if we get it. We could even push our way all the way back to 103 if SPY rips this week. But this level on Amazon is key. If we break 81.48 on Amazon on the weekly time frame, I'm looking for first stop on Amazon to be like $79. And if we lose that, I'm looking for $65 on Amazon, which is crazy. But before you call me crazy, let me show you another weekly. Let me show you why this is a big time for a big level on the weekly. When we bounced at 65 on Amazon back in 2018, now that's taken into consideration, this is split adjusted price. We pushed up over that 81.50 level, came back down, nearly tested it, right? 83.60, kind of flirted around this level, and then we almost lost it again. We started selling off. This is during COVID, right? This is the COVID bottom on Amazon. 81.30 basically is the COVID bottom when we sold. From that 81.30 level, we ripped all the way up to 167.21, right? So basically 100% move to the upside. That's where I'm getting this key level from. This is a massive point. Buyers stepped in majorly here. You want to talk about demand and people wanting Amazon? People wanted Amazon at $81.30. Again, split adjusted, but people wanted this here when COVID, this is the COVID low, March 20th of 2020. From here, Amazon went all the way up to 177.61 by September of that year. Right? By July of that year, we were sitting at 160. We were up 100%. Basically, from April to July, 3 months, 100% return on your investment if you bought Amazon at $81.50. So buyers love Amazon at $81.50 or $81.30, that $81.50 spot. What did they do this week? The same exact thing. Buyers stepped in at $81.48 or whatever our low was. I think it was $81.43. Guys, stocks have personalities, and the same traders, the same investors that were trading and investing in Amazon back during COVID are doing it again now. And this is exactly how you see that. This is why when people say stocks have stocks have personalities, and you have to learn the psychology of trading and thinking like an investor and a trader. The charts allow you to see what the thoughts are of buyers and sellers on a chart. And this is a perfect example. In 2020, March of 2020, almost 3 years ago, buyers stepped up majorly here. Now, we didn't get the same volume that we got here, right? But buyers still stepped up here better than sellers did. If sellers had taken control, we would have lost this and went to 65. But buyers stepped up, right? So this is a key level that I'm watching to break, and I've got my price alert set. You see here, my price alert is set at $81.75. When we break $81.75 on Amazon, I'll get a price alert that will tell me something's going on with Amazon, I'll come back and look and I'll remember, oh yeah, this is a huge spot on Amazon, 81.50. Okay. Before you call me crazy and think that this isn't going to work, let me show you something else, and this is why I have conviction in this play, short if we break that level. Let me show you Tesla's weekly chart. Okay, now we got a lot of levels on Tesla. Bear with me for a second. Okay, Tesla's chart here, this top line that I have is 150, right? This top line here. Now, what happened on the weekly time frame? This is back in August of 2020. Rejection, 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 breakout. What happens when we break that key level? That huge weekly level that we rejected from August 28th of 2020 that we finally broke out on November 27th of 2020. What happened? Boom. 150 break on Tesla absolutely sends us, right? It sends us to 300 by the first week of January. So already investors are up 100% from the end of November to the first week in January. December of 2020 was one of the best performances that Tesla put in on a weekly time frame outside of this week here. When we went from basically 261.83 all the way to 214.50, and you know, what is that? That looks like 3 weeks. Yeah, 4 weeks maybe, 1 month. So when I tell you guys that Amazon's key on that weekly level, this is why I say that, because when we broke through this 150, we got 300, right? Big weekly bounce spot, breakout spot, we get a 100% move to the upside. What happens when we break down through that same weekly spot to the downside on Tesla back in December, 1 month ago? What happened? We broke 150 and we fell all the way down, right, to 108.24. Massive, right? We dropped $50 basically when we broke down through that level. 30% move to the downside, something crazy like that. Okay, so when you go back and look at Amazon, we broke that key level on Tesla, fell down. When you look at Amazon, it's not that crazy anymore to think, right, that if we lose 81.75, we could see a 20% move to the downside, or 30% move to the downside back to 65.50. And that's going to be a key watch for me, guys. This is going to be a swing play for me, that if we break this, it might happen in a week. If this happens on a Monday, we'll buy those and we'll swing them down to the downside to 65.48, because we could hit on a Monday, if we lose 81.75, we could be in the money, right? We'll buy like $70 puts. We could be in the money by $5 by Thursday. Maybe we'll take 2 weeks out. 2 weeks out, $75 puts on Amazon, and we'll be, you know, deep in the money with time on them. But this is going to be a top watch for me going into to Q1, is a break of that. Last chart real quick I want to show you guys. I don't play Apple a lot, but I want to show you guys where we're at with Apple, what's going on, what I see. Darth is really the key guy on Apple. But again, guys, key levels here on Apple, 130, which is Darth's big level. And then the downside level that I have here, 127.81. What's happening? We're hammering at these levels, right? This to me looks bullish. We're selling, but we're getting big bottom wicks on these candles, but we are getting, you know, red. So if we can't get back over 130, I'm looking for us to make another new low, because if, you know, we talk about trend structure, right? We talk about what's going on with the trend. Let's talk about that. Higher high, now high point, low point, lower high, lower low, lower high, lower low, lower high, lower low. Potentially, if we bounce back up, we could see 138, 140, somewhere in there before we sell off again. So if we are going to bounce, I'm looking for us to reject. I'm going to go ahead and mark this level on my chart. This is where I'm looking for us to reject. Let's put it right there. 138.32, right? held, broke through it, new low, held it, pushed up. There's a little bit of a chop going on here. I'm not really too worried about that. We pushed up through it, wicked off of it, and pushed all the way up to, basically 175 up here. But this is what I'm looking at on Apple. Apple does look bullish based off of the wicks, but what I will say is if we lose this, the next spot down on Apple I'm looking for us to bounce out is basically 121. If we lose 121, I'm looking for 115. If we lose 115, I'm right here looking at 105, and then under that, basically 100 psych level. But realistically, Apple could fall to 80 if the markets really do sell. That's how much room we have to the downside on Apple. I'm not the big Apple guy. Darth is your big Apple guy. So that's what I'm looking at. But one thing to note, guys, look what happens here on the weekly time frame. When we push up and get big wicks on the weekly, see what happens? Big wick, push down. Big wick, right? High here on Apple, 178.80. We pushed all the way down in subsequent weeks. This is April. By June, right? We were sitting at 128. Okay, same thing here. In August of this year, the high, 175.86. We just pushed all the way down, right, to 124. So you don't have to play, you don't have to play months out. You can play a couple weeks out. You could play, 2 months out here, and you could have been, 1, 2, 3, 4, 5, 6, 7, 8. 2 months out would have put you here, and the low there was 134. We were sitting at 175 up here. I mean, you could have bought like 150 puts for 2 months out, and you'd be $20 in the money, with at expiration if you really wanted to. So again, this goes back to court awareness, guys, chart awareness. Make sure when you're looking at the 5-minute chart, you're pulling everything back and looking at the hourly, the daily, the weekly, and that's what these Sunday scans are for, guys, is to pull your vision from looking at a 2-minute, 5-minute chart to really looking at what's going on the chart overall, like what's happening, and where could this chart, where could the chart send us to? So those are my levels, guys. That's what I'm looking at this week. Going into tomorrow, we'll talk about it in pre-market huddle. We'll see if anything pops off at pre-market, if we get any price target upgrades, anything like that. Let's look at the bank earnings this week, right? We've got Powell speaking this week. We've got Hawker speaking this week. We've got CPI this week, and then we've got consumer sentiment data coming out on Friday. There's going to be a lot of volatility now. I'll say this one more time to you guys. Make sure that you size down this week, especially on the indexes. Especially on indexes. SPY, QQQ, names like that, IWM. Size down, because if plays go against you, they're going to go against you in a big way. And I'd rather you guys be sized appropriately to lose that than to be sized too heavy looking for a home run and getting wiped out. One trade will not make you a millionaire this week. I promise you, it won't happen. But one trade can blow your entire account, and I don't want you guys to do that, basically your second weekend to 2023. Let's continue to be professional risk managers. Let's win big, win small, and lose small. And you know what? If we have a small loss this week, from an overall perspective, that's okay, right? We've still got many, many weeks to go. We're still going to have 240 trading days to go in 2023. We've still got a lot of time left in the year. Let's make decisions today that set us up to trade well tomorrow, and set us up to trade well 6 months, 12 months, 24 months from now. All right, guys, that's all I got for you. Again, we talked about SPY, Tesla, Netflix, and Apple. I will see you guys in pre-market huddle tomorrow morning at 9:15. I'll try and update you guys around 9 o'clock if I see anything going on in pre-market that I might want to watch going into tomorrow. But these are the levels that I'm watching. Feel free to go back and watch this. Make sure you guys are charting your own levels. If you're struggling and you don't have levels charted, that's going to be my first sign that you guys aren't really, serious about wanting to get better at trading. Anyone can take alerts, and anyone can get, make a little bit of money off of alerts, but the real wealth is built, guys, when you learn how to trade on your own, when you learn how to find setups, when you learn how to chart, when you learn, how to play a stock that has a personality that's different from other names. That's when you really start to make your own money. And at the end of the day, that's what I want you guys to do. I don't want you to have to live off of alerts. I want you guys to be able to fish, on your own. So hopefully these things are helping you guys. Hopefully what we're doing and walking trades, walking you guys live through trades, hopefully that's helping. And I'll remind you guys again, make sure you guys are using that Premium Concierge, because that's your channel, guys. That's not my channel. It's not B-Trades. It's not Darth. That's your guys' channel. No one else in the Discord has access to that channel except for you guys. It's a select group. Only the Wall Street traders have access to that, and that's all of you guys who are on the premium side. So utilize that chat to ask us questions that you maybe don't feel comfortable asking on Wall Street, or utilize that chat to ask us specific questions, because we answer questions in there prior to Wall Street. So tag us in something in Premium Concierge, and that's where I go first to answer any questions, because I want, you guys are the premium members. I want to help you guys out. And hopefully what we're doing is helping you guys. And if you do see something intraday that you like, throw it out there in Premium Concierge and tag us in it, because it might not be on my radar, but if I see it and I like it, 100%, it might be a great trade that I might jump on with you. So hopefully, like I said, these things help you guys, and that's going to be it for me tonight. If you have any questions or any follow-up things, throw them in Premium Concierge, and I'm happy to sit around and answer those for you guys for a little bit this evening before I head off to bed. But yeah, with that, let's have a good week, guys. Let's stay green this week, and if you were red last week, that's okay. Let's win big, win small, and lose small, and let's get after it tomorrow. I'll see you guys in pre-market.